I think in the main our revenue stream is really driven by domestic taxes, which obviously is your typical income tax. We've introduced, or we're looking to the future to introduce dividend tax that will come from non-resident shareholders in some of the financial services companies, because obviously of a view from Treasury that there's under collection in that sector. There's now tax properties, which is essentially your estate duties. Again, there's been a few amendments in the estate duties tax regime in terms of thresholds that have changed. For instance, if you're buying a property below 1.1 million, you don't pay transfer cost, or rather the estate cost, and then subsequently you've got a bit of a break there. Then there's the value-added tax, taxes on international transfers, which means the FACUS and that sort of thing. You've got non-tax revenue. And essentially, this is really what government makes up of revenue basket. And I think if you look at how the collection rate has been in comparison to the past trends, you realize very quickly that we appear to have done much better than at any other point in time, which is in line with the prevailing economic environment. So things are slightly looking much better than at any other point for the Namibian economy and for government revenue.
Now, Minister Shiimi mentioned that Namibia's debt to GDP ratio has increased significantly. What measures can a country heavily dependent on tax income like Namibia implement to strengthen its revenue collection?
Well, I think, one, it has already embarked on some of those initiatives. It has, for instance, established now a specialized tax institution, which is NAMRA, and we can see that efficiency has slightly improved, and but more so, the whole collection rate looks much better. Obviously, if you look at debt over the time horizon, you realize that there was at a certain point that our debt was growing much quicker, very quickly. But now it appears to sort of have stabilized around the 61% debt to GDP, and it appears as if it's being managed. But over and above that, one must always remember that the issue of the size of debt is obviously critical. But what is more important really is the issue of the direction of debt in terms of where is debt going. Because ideally what you want debt to be moving towards the productive side of the economy. Now, we have got debt maturities that are coming up in the next medium-term expenditure framework, which is in the next 3 years. And one of those is coming to maturity in 2025, which is essentially the Euro bond. Now, the minister in his own admission spoke about that being the biggest single maturity date of a debt in the history of our country. So you're looking at around Namibia having to repay over 14 billion debt to the Euro bond. Now there are different mechanisms that the Treasury is looking at in terms of trying to meet those obligations. We've spoken about paying over the FACO receipts, they intend to release out of receipts in 2025, and a certain part of it will go to tax. So with that said, on the one side, you want to make sure that debt is going to the productive side of the economy, so that you are able then to deal with the debt component much better. You also want to make sure nominal GDP growth is growing much quicker than your debt levels in terms of expenditure or annual growth. And through that, you would again be in a position to be able to bring your debt under control. So, and then lastly, we've spoken about the NAMRA component that has come into play, and the work we are doing to try and make sure that they are efficient in the collection rate is up to speed.
Now, in the recent budget, the minister stated that a substantial amount of the government's debt will be repaid this fiscal year. Do you think that there are potential investors identified to service this bill?
Well, the minister was very clear in terms of how he intends to do that. One, he spoke about the SACCO receipts, saying 3.5 billion or 2 billion or some also come from that side. And then the other portion was going to come from the tax revenue, which will then be able to meet around 2/3 of the amount that will be outstanding of the debt. The other 1/3, the minister made reference to that coming from the most cost-effective instruments or cost-effective measures, obviously to mitigate the potential risk of rollover of the debt, but also to be able to minimize the cost on your debt, because if you're unable to meet your obligations in time, it means that your cost of servicing your debt also increases, because then your credit worthiness of the country, you can look at it differently. So the minister will make the point, the honorable minister made the point that we should be able to manage those risks in a manner that it doesn't come to this. The 2/3 will obviously be redeemed via the SACCO, the projected SACCO receipts and the tax revenue. And the 1/3, he mentioned that there could be conversations with different development financial institutions. So on that side, I think it's still further down the road, not very far down the road, because 2025 is really around the corner. So we hope that those conversations bear fruits to be able to make sure that PFIs and all the other measures that are being listed can then be in a position to redeem the debt application for 2025 October.
Now, considering the transmission of around 3.5 billion SACCO receipts to the sinking fund and its potential impact on prices and currency strength, how do you foresee this affecting ordinary citizens and the country as a whole?
Well, I think the country has been taken care of. If you think about the budget in itself, we've spoken about the estate duties in terms of the threshold. You've seen the increase in the old age pension grants. You've seen the tax amendment and income tax for personal personal income tax, especially for the low income earners, which speaks to around 50 to 100,000. The threshold has now been moved from 50,000 per annum to 100,000 per annum, which frees up a bit of cash or other personal disposable income for households. But also there's been the threshold moved up in terms of VAT registration or VAT tax or VAT income, where it's no longer 600 but rather at 1 million for SMEs. So those amendments means that the general business environment and household expenditure has sort of been taken care of. The social welfare has also been sort of considered in that respect. However, what now needs to be looked at is the implementation of some of the big infrastructure projects. Because remember that this is a big infrastructure spending with an expansionary budget. This is well in line with where the economy is currently. So what you then expect is that there's sufficient taking proofs to be able to make sure that these projects are rolled out, jobs are created, and consequently money is being put back in consumer and businesses' pockets for them to be able to create investor opportunities and increase domestic demand. And subsequently then improve the tax revenue of the central government. So I think everyone has been taken care of in this budget. Obviously the balancing act of making sure that everything is done prudently.
Well, let me thank you so much. Perhaps lastly, I can just ask you whether you have any noteworthy comments that you would like to add regarding the country's debt as presented in last week's budget.
Well, I think we've spoken about in terms of the debt to GDP appearing to be growing much slower than nominal GDP, which augurs well for debt management and debt sustainability, because ideally it's what you want to see. I've also spoken about the improvement on revenue collection side, and we hope that continue for a while. And over and above that, I think the direction of debt towards the productive part of the economy will go a long way in realizing or dealing with debt accumulation, but at the same time also creating opportunities for the economy.